Welcome to this week's Nebraska Soybean Board Weekly Market Roundup. I'm Brian Stuever, once again filling in for Susan Littlefield as we have two gentlemen from Tredas ready to break down what's been happening in the grain markets over the past week. Bit of a roller coaster, particularly late in the week. Had an exciting day on Thursday, but Friday did not close the way I think some producers hoped it would. We'll get to all those details coming up in a second, but first, a word from our sponsor.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the weekly market roundup. I'm Brian Stuever, and joining me on the screen from Tredas, Matt Stuever, as well as Alex Gade. Appreciate you both spending some time with us here. Alex, maybe we'll start with you. I'd like to kind of look at the past week, as I kind of teased up there, of what's been happening, particularly in the grain complex. Let's kind of summarize this week's action.
Yeah, overall tough day stretch here for corn and beans. We appeared to find some support here on corn, down at some major levels. We go and test that 460 range, but able to bounce back on Thursday, have a good outside trading day, but ended up giving a little bit back today. But, we've got some overall congestion. We hit our head on a moving average there at 470, but, we'll have a little congestion if we're able to, start the week next week and crack that 470 level, but a little more congestion, that 470 to 480 range. And then ultimately above that is our 200-day moving average that we've tried to crack 2 or 3 times there in May at 490. It's been a pretty good resistance point. Similar thing on beans. We found support in that 1150 range, had almost a 70-cent sell-off. So that kind of tough to maneuver here as we transition out of May into June. But we held some major support levels that we traded back in, mid and late April. Again, similar things. We've got some congestion in that 1175 to 1190 range. So if we're able to crack that, 1190 range, we've got a 200-day moving average right at 12 and a quarter. That stands between us and the gap, still sitting there at 1240 from the turn of the first of the year.
Well, Matt, as we bring you into the conversation, seems like us here on the media side, as we talk about these markets every single day on the radio and our different broadcasts, we always want to put a why behind the movements. As you look at the activity from the week, is there a particular why we went up there on Thursday, then a little bit back down, losing some of the ground here on Friday?
Well, obviously earlier in the week, we had the crop conditions report come out. Initial ratings, corn ratings especially, surpassed last year's ratings. Crop was rated 75% good to excellent nationally versus 70% expected. This time last year, we were mid-60s, so we're definitely off to a better start versus a year ago. It wasn't pretty impressive to see that awesome 100% good to excellent in Pennsylvania. Your planting progress for corn, 91% planted nationally versus 92 expected, so that was right in line. Beans on your progress were 78% versus 80% expected. So maybe a smidge behind there on beans, but overall right in line with where everything was. Thursday's move higher, one could probably say some weather tendencies probably had something to do with that, mainly due to some heat building back in, dry weather later on in the extended forecast. Then also you had a situation with Brazilian tax ideas being implemented there that would help with U.S. exports potentially. Could have possibly been a little bit extra that helped out. Then today was probably just a little bit of, I would say, correction or possibly downward movement going into the weekend. So
I appreciate your thoughts on that, Matt. Maybe a question for either one of you. I've heard a bit about that Brazilian tax credit. Could either one of you maybe shed more of a light on what that story is and perhaps how it could help those here in the U.S. Make it more advantageous?
Yeah, from my brief understanding, I think they're just trying to clean up their budget and be a little bit more stingy with tax credits. So that gets passed on to maybe the farmer, kind of reducing some of the price that they receive. So I think some larger international commercials maybe looking at that as a negative thing, but be a positive thing here domestically. If more of those exports come our way, would certainly help. But that's my elementary understanding of it today.
That's never good. We try to break down tax code here on the program. Let's talk about basis, though. How did things shape up this week?
Bean basis has been pretty stagnant. It seems like that's been kind of the theme for a year or two, but corn's certainly been supportive, as a result of, we get a little bit of sell off in the board. I would say here it's firmed up 10 or 15 cents in the recent weeks. You maybe couple that with planting delay or some field work and guys being in the fields a little bit longer than expected with the moisture we've had here in the Corn Belt and Western Corn Belt. I think guys are maybe a little bit hesitant to go and hit the market with, just price frustration and different things going on there. But yeah, I think led to commercial pipelines thinning and trying to cover their short-term needs with decent profit levels.
And Matt, I saw somebody post on X this week talking about it seems like there's more disengagement from the producer level to want to engage in even looking at prices right now. Is that something you're hearing with your clients as well?
Overall, I think of the industry, yes, there's some frustration with corn price levels. Obviously everyone's still wanting that $5 level. When you see continually dropping below that, from the January move lower, we had our rebound obviously in the seasonality time frame here lately. Now going forward here, many are saying, hey, if it got back to that $5 level or pretty close to it, we would sell again. A lot of the commercials are trying, with basis, what Alex just alluded to there, getting closer to that level, flat price level, so that producers will move a lot more corn. But yeah, overall, I think they're frustrated with what little bit they have left to move for the crop year.
You're just joining us. This is the weekly market roundup brought to you by the Nebraska Soybean Board. Alex Gade and Matt Stuever, our guest today from Tredas, as we talk about this week's happening and perhaps a shift here to look at what might be happening as we flip the page and open things back up on Sunday evening. Before we kind of close that book, I guess we better talk about exports and what the report said this week. I saw China showing up at the books here on a Friday.
It was kind of a nice little change of pace. On Monday we sold 4 million bushels of corn to Spain, and looks like on Thursday had another 6 million bushels sailed to unknown. A lot of people love to tie that right to China, and maybe it is, maybe it isn't, not sure, but just like you alluded, we sold 104,000 metric tons of soybeans, Friday morning. So that's probably an important thing with the Brazil tax deal we were just talking about. Does more of that continue? Be curious to see. It'd be nice to have.
Matt, might get your thoughts on how things are looking weather-wise. It seems like as we progress through the month of June, of course, get into July and elsewhere, weather is going to be the factor that could swing things, I guess, dramatically outside of perhaps a range. Your thoughts there?
Yeah, yes. Weather's always a persistent wild card. It could, in one day versus the next, could flip the market from bullish to bearish. So it's definitely a possibility. A great example is we're looking for, the vast majority of the Corn Belt is going to see little to no rain over the next 7 days. However, midday models just released here a few hours ago. Said, hey, more preset for Nebraska, Missouri, Kansas, Oklahoma, and Texas today. We're probably going to see cooler temps likely to prevail through the first part of next week. But then your heat does come back into the extended forecast where the first taste is some sustained 90s in eastern Nebraska. So this heat, could possibly have some improvement to the board situation. But, as I just alluded to there, the moisture that's going to come in today, that the percentage chances were up there could, continue our wet pattern that we're seeing.
Alex, economic news of the week. Seems like some folks were looking at data coming out on Friday. Anything catch your attention?
Yeah, big news, non-farm payrolls, destroyed estimates. We got 272,000 jobs. Yield on the 10-year Treasury also went back to 4.4%. So both of those tidbits will keep the Fed kind of watch inflation and rate cuts. Now not expected until December. So consumer spending could stay pretty robust through the summer, but all these factors could, support or provide support to the commodity index in general.
Well, let's kind of look big picture as we sit here recording this on the 7th of June. June typically does offer some opportunities for grain marketing. Do you think, as you look at the factors shaping up for this month, that will provide true here in 2024? Throw that question to either one of you who wants to put your neck out on the line.
Yeah, I mean, June typically will provide some of your better marketing opportunities. We'll see if 2024 is one of those years. Being in an oversold kind of technical weak point today, I think it's possible we get some sort of a rebound and opportunity in here in June. Is that 480? Is that 490? Is that 5? Or do we go fill the gap on corn at 502? I don't know. But, in the same breath, I think we'll need some new piece of news, whether that's like Matt was talking, weather or possible, black swan event, some geopolitical situation happening. But I think in all, we'll need some new news to get things really excited, just based on the amount of moisture we've got. And talking to producers, I think maybe the best thing for the crop right now is the sun to come out and get a little hot. I mean, if we planted in not great conditions and we've maybe got a little bit uneven stand, or if guys are, spent the last 2 weeks kind of piecing in potholes that they've tried to plant, weather might be the best thing for us here. So I don't know. You get a hot, dry forecast. It seems certainly bullish, but at this point, it would probably help the crops. I don't know if that maybe has a bearish tint to it too.
Mm-hmm. Well, Matt, let's get your final word here. Anything else in addition to weather you're going to be watching as we turn to the markets next week?
We've considered to have ample moisture going into it, possibly enough to even get it into July for tasseling for the majority of it. There's possibly already going to be some tasseling, in the southern corn belt, take for instance Missouri or whatnot here in the next week or so. So as we get into that period, we have great, really good crop condition ratings moving forward. So it's definitely, I think it was alluded to earlier, some bearish potential to the market. But on the flip side, we see some heat come in June. Could be the rally mid-June. Last year, we saw a mid-June and a mid-July rally based off of heat. So definitely is always a possibility year in and year out.
That's Matt Stuever, Alex Gade also joining us, both from Tredas here on the weekly market roundup, brought to you by the Nebraska Soybean Board, as well as Nebraska soybean farmers and their checkoff. I'm Bryce Duskett here on the Rural Radio Network.